The markets are kicking off Q2 in a very bloody fashion. We'll be discussing everything happening there, the reverse repo, some warning signs that are flashing, and much more today on Money Never Sleeps. Welcome back, everybody. Hope you had a great weekend. Before we get going, do us a favor. Like, subscribe. Remember, nothing that we say is financial advice, so please do your own research. Kevin, it's Monday, a start of a new week, month, quarter, and I'm feeling things. I've been on the do less side for a while now. Okay, I'm all about doing less for Q1, but I'm starting to entertain the potential possibility of maybe doing something. So from doing nothing at all to doing like balls in, I'm like right about here. I'm like right here on the do nothing scale. So that's how I'm feeling right now. How are you doing today?
Yeah, I don't even think of having at least even one nut in the game just yet, because
No,
I
I
think
never said having a nut in the game, but like I'm
no. For
starting
me
to.
personally,
Okay.
me personally, I have no desire to put any nuts in the game, not even one yet. But enough ball play. Yeah, I'm feeling pretty great today about the markets. Right, there's a lot of stuff that we've been talking about for months that is finally hitting the fan. Markets are kind of realizing we're seeing the warning signs. I said this a few times past few episodes, but the conditions are perfect right now for there to be something to happen. And we're just kind of seeing that unfold in Asia the past few nights. Last night, even more problems out of Japan. And what's happening right now, the dollar's up today. And what does that mean? That means the yen is continuing to weaken in Japan. We're seeing the yuan also weaken in China. So we're in a very, very cautious, thin ice type of play right now, where one thing that's going great in the US could absolutely be detrimental to Japan, to China, and that could just force their hand to make a move, and that could absolutely just fuck everything up for markets. So right now, I'm very excited. I'm doing less. I'm eating popcorn, watching how this plays out, because I think this is going to get so fucking entertaining.
To your point as well, we saw the VIX have a nice gap up to start the day. Currently just under 14, up almost 7% since trading began this morning. I've been seeing more and more, seeing articles on Bloomberg and other sites talking about how strong the economy is, but there is still this belief of extreme volatility and how people aren't really protecting against a moderate pullback, but they are placing bets against a very extreme black swan type of event. So it's really interesting out there, and we've made it through the holiday season. We'll get we had Q4 earnings for everybody. Everyone was all sunshine and rainbows there. Can that continue? There was some manufacturing data earlier today suggesting that demand is still strong. Manufacturing is at its highest level since 2022. And I'm seeing a lot of other people talk about we're at the highest level of these things since 2022. Maybe that's good. Maybe we keep breaking through those 2022 highs, or maybe we see a repeat of what happened, 2020, in the later months there.
Absolutely. I don't like the ISM data recently. I don't like anything that's coming necessarily from a Bureau of Labor Statistics, any of those agencies, because it's very different than the surveys that we're getting out of these, these Fed regions like New York, the Empire State's manufacturing data, or the Chicago PMI or manufacturing data. The stuff that we're getting out of these are so different from what they're reporting at the federal level. So I'm very I would say, I hate to say cautious again, but I am cautious and slow to believe that that's exactly what's going on here, especially with how many jobs we're seeing lay off. In March, over 73,000 jobs in the private sector that are gone. We continue to see hours work going down. I think we're getting a really good narrative. I just don't necessarily know if we're getting the full truth of that. And again, I go back to the currency thing. The yuan is losing strength. If we were in a place where we're seeing high demand, you would start to see the yuan strengthen, because then we're expecting that their economy is bouncing back because there's more people that are working. There's more trade that needs to be done in the yuan. We're not seeing that right now. So I think that right now we have to believe either the data at face value, or we just have to be a little bit cautious and question everything that we're being fed, because I completely disagree with the fact that everything's picking up. It might be at 2022 levels, but guess what happened in 2022? We also hit a pretty much a local bottom in what I think is a greater macro trend.
Yeah, the macro picture, this takes a lot of time and patience for this to play out. And if you were completely out of the market, may not be the best feeling in the world. We'll see what happens as we move closer to the election. All of that. The Fed is eventually going to cut rates. Powell really, all the Fed speakers are really reiterating this week. And I think we're going to continue to hear it based off of the data that they're in no rush to cut rates. That they think that they can keep them here. The consumer is strong, demand is high. They don't need to be in a rush to cut them because they don't want to cut too soon. All of that stuff. Let's see if their tune changes, if we, more and more, and because this is, more pressure on the banks, especially a lot of these smaller ones. Like, can they hold up to continued high interest rates? I'm not too sure about that.
No, not at all. Speaking of banks, let's get into the BTFP, because that data is very conflicting too, because we get that data every Thursday, right? And we talk about how that money is due 1 year after it's taken out. Well, last week we were expecting it to drain a lot more than it did, and that's kind of concerning in my opinion. It's showing me that someone didn't pay in full. Uh, that's a problem. Obviously, we also know that there's a collateral shortage. So whoever put up that money, or didn't put up that, who put up that collateral but didn't pay it back, probably lost that collateral. So that's a big hit to them as well. But we're looking at this right here. This is the week of the 25th of March. You can see that it dropped 11.57%, only down 17.37 billion. Let's go to the week of March 25th back here. Should have been right around here. You can see that it was up 64 billion. That's right there. Let's see. It was up 10 billion. Yeah. So it should have been about $39 billion that was paid off. We only saw 17 billion of that. So there's about 18, 19 billion dollars that is missing from this payment. Now, why is that problematic? Like I said, they put up the collateral. They didn't pay in full. There should have been a kind of like a delinquency notice, and they have to pay that back, or they have to lose that collateral. We didn't hear anything from that. So I'm assuming that the collateral was taken and they just won't get that back. Now, what happens if it continues to be that they are not paying this back, right? This is a lot of money. This is a ton of money that still needs to be repaid. And if you start getting delayed payments, they're not coming back and paying in full 1 year later. Well, then the Fed just has a bunch of these crap assets on hand that they took as collateral. And it's like, well, who wins in this scenario, right? So it's very, very scary to see this so early in the game. They're already not paying it back. I mean, we got 132, almost $133 billion to go. Let's see how this plays out in the next few weeks. Thursday is going to be an interesting one. I'm not going to do the math right here because I think it's a little bit skewed now that we don't have that 19 billion that should have been drained. We should be somewhere right down around 111, 112 right now, but we're not. The banks are in a very, very fragile state right now, and this is not a good look just to start off the bank term funding program repayments.
All right, so that is where we're at with the BTFP. I want to on that note, can we get into reverse repo a little bit? I know that you're concerned with what we saw there, how much has been drained out of it in the last 24 hours. Let's get into that, some implications, and then we can dive into some crypto charts.
Definitely. So reverse repo, we're seeing that there was a lot more liquidity on Friday. We saw that $594 billion. It was a huge increase on Friday, and it was increasing for a period of time. It kept climbing last week. It seemed like it was too good to be true, and at some point we were going to see a major pullback. I even sent out a tweet saying it would probably be sub 4. Well, today we didn't get sub $400 billion. However, we did get this, which is a pretty drastic move from Friday's what the counterparties took. And we see that 74 counterparties take $441.9 billion at the Fed reverse repo operation. What does that tell me? That tells me that $153 billion was drained from this facility overnight. So pretty much you don't have that money in there. As this continues to drain, we start seeing counterparties, that number reducing as well. It shows you that there's a lot less liquidity on hand. Now, this kind of lines up with what we were talking about earlier with the dollar and the yen, because it shows you that there's absolutely a liquidity shortage in terms of the US dollar. People are going to want to start hoarding those. And maybe that's why we're starting to see it pull back and people are not willing to throw them into circulation and, make that return. The other thing is they have to pay it back because people are withdrawing. And we've seen that a lot of banks are seeing a lot of withdrawals as well, too, in the last quarter. Now, the other thing, too, is the yen is getting to a point where the Bank of Japan is going to have to make a move. I'm going to show you guys this article, and this is just showing you that maybe doesn't have to be anything serious, but the Bank of Japan is definitely making moves right here. Bank of Japan's stash of bonds is set to shrink for the first time since 2008. What happened in 2008? I think everyone can remember, especially since we talk about it a lot on the show, but there's a lot of speculation on what's going on in Japan. How is this going to impact? We talked about the yen carry trade last year. I think it was like in August, maybe late July, early August, and that yen carry trade could fuck up a lot of shit here in the United States, right? The Bank of Japan could be forced to raise rates and do currency intervention, which absolutely takes a lot of money that's here in the U.S. and moves it back over to Japan. What does that mean? That means the equity markets could absolutely tumble. That means a lot of people could be going straight into these treasuries, both for Japan and also for the United States, right? So it's going to be very much a mad dash, I think, for what's happening here with the reverse repo, with liquidity, with the dollar, and with the yen, to the point where we're going to start seeing maybe the equity market take a massive hit. We're already kind of seeing that in Japan. Last night, the Nikkei dropped below 40K. I think it's at 39. Let me pull this up real quick. The Nikkei dropped all the way to 39,803 points. It was down 1.4%. And that was off that news. Imagine how it's going to be tonight. The dollar's up, guys. The dollar's up. That means the yen's going to be down. And how are they going to react to that tonight and this week? If the dollar keeps climbing, you start seeing gold climbing here, which I think is a play by China to get more dollars, buy gold, take the profit, sell that off for USD. It's going to be problematic.
Are you going to be up all night watching the Asian markets again? Like, do you get any sleep? No. Okay.
It's not worth it, man. I watch this stuff until a certain point, and then I'm just like, okay, it's playing out. It's just taking a little bit of time, but I think that we're in a very scary place because Asia is going to be the one that makes the first move, and I think it probably is going to be Japan. And if that's the case, then Japan was the safe haven for a lot of Asian investors who didn't want to put their money in China. They were moving into the Nikkei because it was fucking all-time highs, first time in like 30-something years. Now, if that starts to pull back because they have to protect their currency against, inflation, against other currencies worldwide, that equity market is going to tumble. And we could be looking at something very similar to the 1990s, where it dropped, I think, in the first 6 months, like 35% from the high. So I'm not saying it's going to happen here, but it could. And that's the problem, because that yen losing value against the dollar just fucks up a lot of shit when it comes to trade.
All right. In this order, I want to go into Brent crude, gold, and Bitcoin.
Okay. Let me pull up oil. That one's been.
So I'm seeing it's been on the move up. Brent is at 88.16, its highest price since October of last year. So seeing some movement, and then we have gold at right around an all-time high, I believe.
It is an all-time high, or was last night. But I mean, oil's been on the tick up, right? I think there's a good chance we could see oil in the close to 100. Is this a blow off top for oil? I think so. I think that demand is dropping significantly, and we continue to see these cuts that are happening, and it's kind of inflating the data to the point where the Fed is not willing to cut, right? Because they think that the market isn't soft enough. We're starting to see oil pick up. It's the biggest farce, in my opinion. I think oil is definitely the reason why the Fed is not as willing to cut. It's inflating, the data. It's inflating everything.
But that's what the core number is for, right? Like, are they?
Yeah, but they're not reacting to it. That's the thing.
Yeah,
there's no indication that consumer prices are going to continue to stay higher for longer. They're going to continue to go up from here. And again, that's mainly from demand. I see consumer prices, if not going down or staying around the same price, they might not go to the point where we were pre-2020, which I think we all agree is never going to happen again. There's too much money in circulation, but it's still not going to go up to the levels that it was in 2022, 2023, where eggs were fucking $9 an egg. They weren't that high, but it felt like that. But these retailers and these people who run these businesses, they're going to have to chase the consumer, and they have to chase the consumer down because the consumer has less discretionary spending, despite what everyone is telling you. We know that consumer is getting really tapped out here. Everything is becoming debt, and that's a problem. Now with this, we're seeing the oil price go up because they continue cutting. There's problems in the Middle East. Russia is saying, we're just going to keep cutting barrels a day. OPEC's being a problem. If it continues like that, yeah, you can make the price go to fucking $2,000 a barrel. But the question is anyone going to be willing to buy it here? And again, we're going into the summer months in the year of an election. This is not a good look. There's going to be some point where it's going to break and you're going to start seeing this come down. And what happens when it comes down is, I can't look at this on the Brent oil. I think this is the crude oil cash. Let's look at US oil. But when there's no demand, guys, this is what happens. This is, 2020, February 2020, price just shoots down. Obviously, no one's working. Everyone's kind of anticipating what's going to happen. You can see here in October of 2018, right after the summer months, it started crashing significantly. When oil finally does go, it goes hard for a matter of weeks. I mean, what's this, 2008? Yeah, 2008 had this really hard run up right at the end, and then it just crashed nonstop until, around January, February of 2009. And that was from the height of 146 back in July of 2008. So in a matter of 6 months or so, you saw the price of oil drop from 146 all the way down to around $33 a barrel. The 77% drop. So once that demand's not there, good luck.
Good luck. All right, let's go to gold next. That has been, that's been viewed as a warning sign for a long, long time. We are at all-time highs. Does that mean that our warning sign should be at all-time highs?
Yes and no. I think the reason why gold is increasing here is a two-part reason. It's either the fact that China is buying gold and selling some of that off in order to have some cash reserves. That's one theory. It doesn't have to be true, but we know that China's been hoarding gold like crazy since, I believe, 2022. Could be part of their play. But the other thing is, too, I think a lot of people are uncertain. And gold is always the uncertain trade. I say that every time. Back in 2023, when the banks started failing, we started seeing gold kind of rise up into the summer, right? It pulled back a little bit, and now it's rising once again. Why is that? Your guess is best as mine at this point. But what I'm thinking here, when we look at gold, it was trading in this parallel channel, right? Hit the top of this channel, and then it had a really good pullback. Hit the top of this channel, which I said that we had a good chance of going to about 2,300, between 2278 and 2,300. It looks like the height of this move was 2265 or so last night. It just perfectly hit the channel. Now we have to wait and see how this plays out over the next few days. But if we look at this on the stochastic RSI, we're almost completely overbought. We're probably going to be overbought on the daily once we get this closed in about 2.5 hours. Where's the next move for gold? Is it continuing to push up? Well, depends. Are we pushing towards something where we're going to see a sell-off in equities and that we're going to see, the dollar strengthen? If that's the case, then we're probably going to see gold pull back. I think people who rode this wave of gold from here back in October, which was the point where we started seeing a pullback significantly and the markets absolutely changed. We started seeing the bond market change at this point as well. And now it's rising up to the point where at the height of this channel where it once was, the second tap of it, I think we're going to have to come down and test this. And if it doesn't hold, and it's very possible it doesn't hold, we're looking somewhere at the base of this around 16. Do I think it's going to get there? Probably not. Do I think it's going to break from this channel? I do think it's going to break from this channel. I think there's a good chance we could find some support around 17. I mean, we could even find support here at 19. We can keep pushing up after that higher and higher. But the thing is, gold is usually a front run option. People know that something bad's happening. They load up on gold. Then there's a correction. And when there is a correction, everything sells off except for the dollar. Everything goes into cash beforehand. That's why the dollar gets strong when we do see a major sell off in the markets. But gold doesn't do that necessarily that well. Gold does really well after the market sold off, about halfway through, when the money from the Dow kind of circles into gold. It's that Dow gold trade that we've seen throughout history. But when I'm looking at gold here, I think this is a bit of a front run move. We're going to see this have a pretty significant retracement, in my opinion. Let's look at the weekly. Yeah, see the weekly's at 100 and 100. Looking at the monthly, 92 and 90. We're in for a pretty good ride, I think, with gold. I think it's going to pull back. I think a lot of people are thinking that we're going to see stagflation or inflation higher from here. I disagree with both of those assessments. Stagflation is probably a little bit more likely to happen, but the problem with inflation and stagflation with gold is that gold isn't necessarily the best hedge against that. We've known that. Honestly, if we want to talk about inflation, the equity market's probably been the best hedge against inflation this time around, which is absolutely wild, right? It's ass backwards. But that just shows you that gold isn't what people think it is. It is always a trade of uncertainty. When people don't know where to put their money, gold is the answer. I think a lot of people that were risk off said, fuck it, let me throw it in the gold. that they're going to see that gold is a bit riskier than they probably first thought in the coming weeks to months.
All right. On that note, let's switch over to Bitcoin. And I want to talk Bitcoin dominance for a second here to start because we're seeing it back over 54 today. It has moved, dominance has moved up, not because Bitcoin has been crushing it, but because it's been bleeding less than everything else.
Yep.
What kind of signal does that send you, Kevin? And do you think that we're going to continue? I've seen some very smart traders out there talk about, when Bitcoin dominance hits 57, that is when it's truly the end of alt season, because we haven't had the alt season that a lot of people were hoping for. But when you look back over the last 6-7 months, a lot of these tokens have seen huge increases. Solana up over 800% in that time is the main one that comes to my mind. You have your meme coins that have outperformed that, but we're not really in the business of talking about those quite as much.
Yeah, we're not educated enough to talk about those.
Yeah, I'm too dumb to talk about Pepe and Harry Potter, Obama Sonic 10, Inu, and Mog. Those things are just way over my head. I'm too middle curve for all of that stuff. Okay, I'm situated there nicely in the middle of the bell curve. But in all honesty, let's talk about Bitcoin dominance for a second here. What that is showing you, and where we think the price is moving next.
Absolutely. And you brought up 57, which was also a number that we've talked about in the past too. And we were talking about it a way long time ago, back in like August, before CZ, back when CZ knew what the sky looked like. But yeah, this is a very important level, I think, because it's a level back in September of 2020 that we tested off, we bounced off. I think that's going to be our level of resistance. That could be our height for Bitcoin dominance. However, I don't think it probably will be, if we are seeing what I think we're seeing, right? There's very good chance that people now with the Bitcoin ETF are going to stay in Bitcoin. Now, the question is, a lot of the reason that money has flown into Bitcoin is because a lot of people in TradFi have been buying this ETF, which with those funds, they use and buy Bitcoin. You can't take those funds that they already bought Bitcoin with and move it into another altcoin, right? That's the problem. That's why you're probably not going to see this alt season. And we'll look at the total charts as well. But that means that Bitcoin dominance is probably going to stay really sticky and a problem for a lot of people. And we can talk about tether dominance as well, because I think that has bottomed as well. And that tells me that Bitcoin might be the best performing asset against all other assets in crypto, even if it drops significantly. It's going to hold that dominance fairly well, even if we see a massive pullback. You might bleed a little bit to tether dominance or USDC, some of these stable coins, but for the most part, I think Bitcoin's dominance, once it starts getting up here, the reason that it's getting up to this region, this 57%, is probably because everything else is going to either sell off or flow back into Bitcoin, because it's like, man, I don't know if this thing is going to survive, but Bitcoin for sure will survive, because now that there's TradFi behind it, it might be a safer play, especially if we start seeing 20-30% pullbacks in some of these alts, which I know Capo has been saying it. A lot of other people on Twitter have been saying it. I completely agree. There is a good chance we could see a 20 to 30% pullback in alts, maybe even worse in the short to medium term. The question is, how strong will Bitcoin dominance be that kind of pulls it down that much? So that 56 level is the one that I'm really watching. Anything above 56 tells me that, okay, we're probably going to be in a period of a sell-off. Now, I look at the dominance in the daily, it's kind of just trading sideways. I mean, the stochastic RSI, you could say that it matters. I think Bitcoin's price action itself matters more than anything. But I do think that we kind of formed this bottom down here in the 40s back in April of, not April, but from this period of May of 2021 all the way till, the bull market high, or I guess the FTX low in October 2022, where now we're going to be in this period of Bitcoin dominance for a period of time. Doesn't have to go, I'm not going to say it's going to go up to 93% or anything like that. I think we're in a different market than that now, but I do think that there's a good chance that we can go above 60%. Maybe we pull back a little bit, but I do think that we are probably going to be hitting north of 60% in the next year or so. And I'm being conservative with that. Some people might be more bullish on Bitcoin dominance. Let's look at tether dominance here. I brought this up a few times, but this is March of 2021 when we had that 50% crash in Bitcoin. This is November 2021, which was the all-time high. And then here we are once again, April 2024, all-time high, and it's bottom on this line. This is a magic act. Every time it hits here, you can kind of tell that, guess what? Maybe the market's getting a little frothy at the top. So those two dominance levels, I think, are the ones you need to watch. I think tether dominance is more important than Bitcoin dominance here, which is a wild thing to say. But I think this is telling you, okay, maybe this is how the game is played. So keep an eye on this because this could trade here for a few weeks, but I think that eventually you're going to start seeing this thing rally significantly. And again, you start going above 5% and you're probably going to start seeing maybe some of these highs, maybe even a higher high. You could see, 10 to 12% if it gets really bad in a sell off. And that would obviously probably pulling liquidity from the altcoins and maybe a little bit from Bitcoin, but you could see that scenario where Bitcoin's at 65% dominance, Tether's at 12%, ETH maybe has the majority of the rest, and then, alts kind of have that little section in between.
Okay, I think that is a good cover. It's good coverage of the crypto markets. We haven't talked about TradFi too much today, mainly because it's just kind of boring out there right now. We're past earnings season. All of the focus is on interest rates. I look at the futures here, and I'm seeing a slight move up in the probability of no movement in the June meeting. May is basically guaranteed they're going to keep the rates where they are, but June is starting to tick up a little bit as far as getting closer to a 50-50 chance of no rate cuts there. So that, I think, is what the stock markets are looking, like financial markets are looking at. Talk about crypto. Anything else before we wrap it up, Kev?
Yeah, just two things real quick. I just want to show Bitcoin. One thing I probably should have said. This is my concern with Bitcoin right now. We're looking at this on the daily. This looks like a double top to me, and it looks like it's rolling over once again. We had that kind of candle that was going below it. They're buying it back a little bit here. Actually buying off a little bit more than I expected, but you're getting overbought. You're getting really frothy here, and these candles are extracting liquidity. Now we might be just liquidating people, but if we're not able to get above this high, I think there's a good chance we could be rolling over to 60,000. Now the question is, does it stop there? My target is 52,000. It's this liquidity range that's down here. And if that's the case and we don't get a new high before the halving and we start rolling and we can't find support on the 60 and we start, there's no level of support where you're going to find until around here, around 52,000, then the 60,000 level in this range that we formed up here, 100% is resistance. That's going to be even more problematic for a lot of people. I think a lot of people are going to go fucking mad long here at 60,000, but you're not going to be able to hold that, in my opinion. I think that we are still due for a major correction in crypto. I said that we were due for about a 5% correction. We almost got it. We got about 4% today. But I do think that this neckline, once that's gone, you're probably going to come down here. Maybe you test it up again, but we're going to be in some of the areas of liquidity that haven't been thought of or touched in a long time. A lot of people that open longs here, they might have to start closing some of those positions. So that's one thing we're going to have to keep an eye on. And the other thing that's going to be really important to watch in the month of April is the VIX. This is ridiculous how much it shot up this morning, right? There's a massive gap below us, and people are still believing that this insurance is not worth it. They're probably going to keep shorting this, but a 6% move to the upside was even higher at one point. This is going to be a problem. And again, this is a problem because everyone is in the market right now, and we know that the corporations can't buy because they're in the blackout window. Maybe that changes when when they come back, but by the time they come back, we're already going to start getting Q1 earnings. And if it's not good earnings and we're seeing problems in Japan, there's a whole lot of shit that could definitely spike this VIX up. I think we're going to see the VIX continue to trend above this line. Maybe this blue line is going to hold the support for a few days, but I think we're back in this level where we're going to start seeing kind of Volmageddon scenario where the VIX could just shoot up one morning and or even in the trading day, and we're going to have a lot of problems. A lot of people are going to be caught off sides, and this could lead to a lot of margin calls for a lot of people who didn't buy the insurance when it was really cheap. So I'm really interested in seeing how that plays out. And again, if that causes the NASDAQ to fall or anything like that, then you know that it's also going to cause Bitcoin to fall with it, because those two have been kind of correlated this entire run up since October. So it's going to get really interesting. I'm happy to be here in April. It looks like the markets are finally doing something other than up only. And I like to see that there's a little bit of fear out there, even if it's not the majority of people.
All right. That is a good place to wrap it up today. We'll be back more throughout the week to give you guys updates on what we're seeing in the financial markets. Nothing too crazy on the data side. We will have some jobs data, but like we said last Friday, can we really believe those numbers, and are the markets even believing those numbers anymore? So we will touch on them with a rather large grain of salt for each. But that's going to do it for today. I appreciate y'all for joining us. If you have not yet, like, subscribe, drop a comment, share us out on social. All of that good stuff is appreciated. Stay safe in the markets. Have a great day, and we'll see you next time.
Take care, everyone.